March 15, 2024, 11:23 a.m. Pacific Standard Time. An OpenAI procurement manager receives an email from NVIDIA with a single line that will define the next 2 years of artificial intelligence development, H100 allocation, 2,847 units. Delivery, Q4 2025. Non-negotiable. The order request was for 50,000 units. The delivery timeline was supposed to be 6 months. OpenAI had just learned what every major technology company would discover over the following 18 months, that the silicon foundation of the AI revolution was built on quicksand. 6 months later, black market GPU dealers in Shenzhen are selling individual H100 chips for $80,000, double NVIDIA's official $40,000 list price. Federal prosecutors would eventually uncover a smuggling ring that attempted to export $160 million worth of H100 H200 GPUs between October 2024 and May 2025, revealing how desperate the global shortage had become. The most sophisticated AI models in history were being throttled not by algorithmic limitations, but by the brutal physics of semiconductor manufacturing. The autopsy reveals a collision between infinite AI ambition and finite silicon reality, where dreams of artificial general intelligence met the unforgiving mathematics of chip fabrication capacity. The cascading supply chain crisis began with a component most technology executives had never heard of: high bandwidth memory, or HBM. Every H100 GPU contains 80 gigabytes of HBM3 memory, specialized chips that enable AI accelerators to process the massive datasets required for large language model training. SK hynix and Micron, the two primary manufacturers of HBM, reported in late 2024 that they had sold their entire 2025 production capacity. SK hynix went further, announcing that all HBM production through 2026 was completely allocated. The global AI industry was facing a memory famine with no relief until 2027. The mathematics of HBM scarcity become clear when examining Meta's infrastructure requirements. The company operates a 24,576 H100 cluster that cost $1.689 per GPU hour to run, with $0.918 of that going directly to NVIDIA for hardware costs. Meta's cluster alone consumes nearly 2 million gigabytes of HBM memory, equivalent to the memory that would power 25,000 high-end gaming computers. When every major technology company announced similar cluster sizes, the aggregate memory demand exceeded global production capacity by orders of magnitude. Reuters documented the severity of the memory crisis in stark terms. DRAM supplier inventories fell from 13 to 17 weeks in late 2024 to just 2 to 4 weeks by October 2025. Samsung raised server memory prices by 30 to 60%, with 32 gigabytes DDR5 modules increasing from $149 to $239 between September and November 2025. Counterpoint Research projected that server memory prices could double by the end of 2026, confirming that the shortage represented a fundamental capacity constraint rather than a temporary supply disruption. The HBM shortage forced NVIDIA into unprecedented supply chain decisions. For the first time in company history, NVIDIA stopped bundling memory with GPU dies when selling to board partners like ASUS, MSI, and Gigabyte. Previously, NVIDIA packaged complete GPU solutions and sold them as integrated systems. The new policy forced hardware manufacturers to source memory independently during the worst shortage in semiconductor history, creating additional bottlenecks throughout the supply chain. Major cloud providers responded to the scarcity by issuing open-ended purchase orders that revealed the desperation driving AI infrastructure spending. Google, Amazon, Microsoft, and Meta told memory suppliers they would purchase as much inventory as the company can provide without specifying quantity limits. Chinese technology giants Alibaba, Tencent, and ByteDance pressed Samsung and SK hynix for priority allocation, offering premium pricing for guaranteed supply. The competition for memory had evolved from standard procurement into a strategic resource war. OpenAI's partnership with Samsung and SK hynix for the Stargate project illustrated the scale mismatch between AI ambitions and manufacturing reality. The preliminary agreements called for up to 900,000 wafers monthly by 2029, roughly double today's global monthly HBM output. OpenAI was essentially asking the memory industry to double its production capacity to serve a single customer's requirements, demonstrating how individual AI projects now operated at scales that challenged global manufacturing infrastructure. The shortage created a two-tier market that separated companies with existing supplier relationships from those attempting to secure new capacity. Tesla, which had established NVIDIA partnerships for its full self-driving program, could maintain GPU allocations for its Dojo supercomputing project. Smaller AI companies found themselves completely shut out of hardware markets, unable to secure even modest GPU quantities needed for model development. The supply constraint had created a have and have-not dynamic where access to computational resources determined which companies could participate in AI development. NVIDIA's response to the shortage revealed how even the dominant GPU manufacturer faced constraints beyond its control. The company reported that Blackwell AI chips were sold out before official availability, with CEO Jensen Huang acknowledging that demand exceeded supply capacity across all product lines. NVIDIA's Q3 2025 data center revenue reached $51.2 billion, up 66% year-over-year, but the growth was limited by manufacturing capacity rather than market demand. For the first time in NVIDIA's history, the constraint on revenue growth was production capacity, not customer interest. The geopolitical dimensions of the GPU shortage amplified supply constraints through export control policies. The Biden administration's restrictions on AI chip exports to China eliminated approximately 20% of potential global GPU supply from the market, as Chinese companies had been major purchasers of NVIDIA's highest-end products. The December 2025 decision to allow conditional sales of H100 chips to China, requiring a 25% revenue share with the US government, demonstrated how semiconductor policy had become a tool of international competition rather than purely commercial considerations. Export controls created paradoxical effects in global GPU markets. Chinese companies, unable to purchase the latest NVIDIA chips legally, drove black market prices to extreme premiums while pursuing alternative suppliers and domestic chip development programs. The restrictions intended to slow China's AI development instead accelerated investment in indigenous semiconductor capabilities while creating artificial scarcity in legitimate markets. American and European companies found themselves competing for reduced GPU allocations, while paying higher prices due to geopolitically constrained supply. The smuggling networks that emerged around GPU trade revealed the desperation driving AI development. Federal prosecutors documented operations that attempted to export $160 million worth of H100 and H200 GPUs to China between October 2024 and May 2025, using complex shipping routes through third countries to avoid detection. Individual H100 units sold for prices exceeding $120,000 in gray markets, 3 times NVIDIA's official pricing. The black market premium reflected the economic value that companies placed on securing computational resources for AI development. NVIDIA's shift away from gaming markets illustrated how supply constraints forced strategic choices about customer priorities. The company reduced gaming GPU production by approximately 40% to allocate more manufacturing capacity to data center products. CFO Colette Kress acknowledged the transformation explicitly. "We have evolved over the past 25 years from a gaming GPU company to now an AI data center infrastructure company." Gaming graphics cards, which retail for $1,999 at the high end, were being displaced by AI accelerators selling for $25,000 to $40,000, reflecting the economic logic driving NVIDIA's resource allocation decisions. The cascading effects of GPU shortages extended beyond AI companies to the broader consumer electronics industry. Graphics cards for gaming computers saw price increases of 45 to 55% above manufacturer-suggested retail prices as AI demand consumed memory and fabrication capacity. AMD implemented 10% price increases across its entire Radeon GPU lineup, citing supply constraints and component costs. The era of declining price-performance ratios in consumer graphics had ended as AI applications competed directly with gaming for the same underlying hardware resources. Advanced packaging capacity emerged as an additional bottleneck that compounded supply constraints. Even when GPU dies and memory chips were available, the specialized facilities required to integrate components into finished accelerators operated near maximum capacity. The packaging process, which combines GPU cores with HBM memory and power management systems, required sophisticated equipment and clean room facilities that could not be rapidly expanded. Companies with finished GPU dies found themselves waiting months for packaging capacity, creating delays that extended far beyond initial silicon production schedules. The rental GPU market provided visibility into how supply constraints affected pricing across different customer segments. H100 rental rates dropped from $8 per hour in early 2024 to $2.85–3.50 per hour by late 2025 as cloud providers brought additional capacity online, but these rate reductions reflected increased efficiency rather than expanded supply. The total number of available H100 hours remained constrained by manufacturing capacity, meaning that lower prices per hour occurred alongside longer wait times for access to GPU instances. Corporate AI spending patterns revealed how supply constraints drove budget increases that executives had not anticipated. Average enterprise AI spending increased 36% to $85,521 monthly in 2025, with organizations planning to invest over $100,000 monthly, more than doubling from 20% to 45% of surveyed companies. The increases reflected longer deployment timelines and higher hardware costs rather than expanded AI capabilities, demonstrating how supply constraints translated directly into inflated project budgets across the technology industry. The memory shortage created ripple effects throughout the broader semiconductor industry as AI demand competed with other applications for the same underlying manufacturing capacity. Automotive companies faced renewed chip shortages as memory suppliers prioritized higher-margin AI applications over automotive semiconductors. Consumer electronics manufacturers delayed product launches as component costs increased and availability decreased. The AI boom had created a zero-sum competition for semiconductor resources where gains in AI capacity came at the expense of other technology sectors. Taiwan Semiconductor Manufacturing Company's central role in AI chip production highlighted the geographic concentration of critical manufacturing capacity. TSMC produced over 90% of the world's most advanced AI accelerators, creating a single point of failure for global AI development. The company's fabrication facilities in Taiwan represented the only source for cutting-edge chip manufacturing, making AI development vulnerable to geopolitical tensions, natural disasters, or supply chain disruptions affecting a single island nation. The investment required to expand semiconductor manufacturing capacity revealed the long-term nature of supply constraints. Building new fabrication facilities required 3 to 5 years and capital investments exceeding $20 billion per facility. The semiconductor industry announced nearly $1 trillion in planned investments through 2030, but these facilities would not begin meaningful production until the late 2020s. AI companies faced a fundamental mismatch between immediate computational needs and the multi-year timelines required to expand manufacturing infrastructure. Memory manufacturers' responses to AI demand demonstrated how supply constraints affected strategic planning across the semiconductor ecosystem. Samsung, SK Hynix, and Micron allocated increasing portions of their fabrication capacity to HBM production, reducing output of commodity DRAM and NAND flash memory used in consumer electronics. The strategic shift toward AI-specific products reflected higher profit margins but created shortages in memory markets that had previously operated with predictable supply and pricing patterns. The emergence of alternative AI accelerators highlighted how supply constraints created opportunities for competitive products. AMD's MI300X series, Intel's Gaudi 3, and Google's TPU systems gained market share not through superior performance but through availability when NVIDIA products faced extended delivery times. Companies that had previously standardized on NVIDIA's CUDA ecosystem began developing software compatibility with alternative accelerators to reduce dependency on constrained supply chains. Cloud providers' capital allocation strategies revealed how supply constraints influenced the competitive dynamics of AI infrastructure. Amazon Web Services, Microsoft Azure, and Google Cloud competed to secure GPU allocations from NVIDIA, with contracts extending years into the future and including minimum purchase commitments. The companies that secured the largest GPU allocations gained competitive advantages in AI services, while those with limited access faced constraints on the AI products they could offer to customers. The shortage's impact on AI model development created a hierarchy of companies based on computational access rather than algorithmic innovation. OpenAI's access to Microsoft's Azure infrastructure provided computational advantages that smaller research organizations could not replicate. Meta's massive internal GPU clusters enabled proprietary model development that companies dependent on cloud resources could not match. The computational divide determined which organizations could participate in frontier AI research rather than simply deploy existing models. Regional variations in GPU availability reflected the complex interactions between manufacturing capacity, export controls, and local market dynamics. European companies faced longer delivery times and higher prices than American counterparts due to allocation priorities favoring domestic customers. Asian markets outside China experienced supply constraints as regional distributors competed for limited allocations while navigating export control requirements. The global GPU shortage had created geographic disparities in AI development capabilities. The economic modeling of AI infrastructure revealed how supply constraints affected the fundamental business case for artificial intelligence applications. Extended GPU delivery times and inflated hardware costs increased the capital requirements for AI projects while extending payback periods for investments. Companies that had planned AI deployments based on 2023 hardware availability and pricing discovered that 2025 realities required substantially larger budgets and longer development timelines to achieve equivalent computational capabilities. Venture capital investment patterns reflected how hardware constraints influenced funding decisions in AI startups. Investors increasingly prioritize companies with existing GPU access or partnerships that guaranteed computational resources. Startups without hardware secured faced significant challenges raising capital, as investors recognized that innovative algorithms meant little without access to the computational infrastructure required to train and deploy AI models. The GPU shortage had created a fundamental shift in startup evaluation criteria. The shortage resolution timeline remained uncertain due to the interdependence of multiple supply chain constraints. Memory manufacturing capacity would not meaningfully expand until 2027. Packaging facilities required similar lead times to add capacity. And advanced semiconductor fabrication remained concentrated in a small number of facilities operating near maximum output. Even with massive industry investment, significant supply relief would not occur until the late 2020s. Meaning that computational constraints would continue shaping AI development for years to come. The reckoning is technological and strategic. The GPU shortage crisis revealed that the artificial intelligence revolution was built on foundations more fragile than Silicon Valley had acknowledged. The computational requirements for frontier AI development had outpaced the global capacity to manufacture the specialized hardware that makes advanced models possible. Companies that assumed unlimited computational scalability discovered that physics, geopolitics, and manufacturing capacity imposed hard limits on AI ambitions. The shortage forced a fundamental reassessment of AI development strategies, from OpenAI's Stargate project requiring unprecedented memory allocation to startups abandoning computational approaches they could not afford to implement. The crisis demonstrated that technological innovation alone was insufficient. Access to manufacturing capacity and supply chain relationships had become as important as algorithmic breakthroughs in determining which companies could participate in AI advancement. The autopsy is complete. The diagnosis is resource scarcity colliding with infinite ambition. The GPU shortage crisis of 2024 to 2025 marked the moment when artificial intelligence development shifted from being limited by imagination to being constrained by the fundamental physics of semiconductor manufacturing. When computational dreams meet silicon reality, manufacturing capacity wins every time. The only question remaining is whether the industry can expand production fast enough to match its own aspirations, or if AI development will remain permanently constrained by the harsh realities of turning sand into the complex chips that power machine intelligence.